So if the OPEC did their job, we got an exemption. Yes. But it looks like the Buhari's administration also did his own job by moving very quickly to talk to the Niger Delta, give them a few concessions. And now you're taking advantage of 2 points, geopolitical, external shocks or external risks. Then you take care of your own internal risks. In between, you're enjoying the price rally. We're looking at about $52 a barrel now. Looks like things are back again because of the extension between Russia, the two big boys, and the kingdom say, look, we're going to extend this to the first quarter 2018, which means that the exemption that Nigeria got last September will continue, will run through 2018. That looks like a bonanza for President Buhari and his team. But again, if we look at the stable exchange rate market, you think this is beginning to trickle down into the manufacturing sector for the big boys, industrialists, Dangote, the rest of them, Honeywell Flour, Nestle, whatever, and those who are the SMEs window? Do you think this is beginning to taper, to filter in, looking at the April PMIs?
We don't have any reason to doubt that fact you've stated, because the April PMI obviously shows that. But again, if you look at data in digression, in the sense, like I mentioned earlier on, the consumption and production pattern of the Nigerian economy is skewed fundamentally towards an import-oriented environment in terms of, let's leave consumption, in terms of household, keeping up with the Joneses firms. Significant portion of the input into the manufacturing sector comes from abroad. And one of the reasons why we have a slowdown in the GDP and us going into a recession, according to two quarters of GDP, we led into a recession, and the third quarter of GDP, negative GDP, was because of the access to that foreign exchange market was limited by supply. In terms of central bank began to implement several demand management tool in the foreign exchange market to ration. They had to exclude some people from the market. But like we mentioned, like the evidences have shown now, we've seen a situation where there's a relaxation of that rationing. There's a relaxation of that supply and demand management, because central bank watches has been boosted. And look at external results figure from about October 2016, apart from glitches around January. It's been going up consistently. And that is a result of those two elements, those two primary factors we mentioned. Oil production did go up, oil price, did go up. And, if you look at oil price from about 50, almost close to 100% doubling of prices from historical level, that's significant. So if we
look at our budget benchmark, we're still home and dry. Even if we do 44.5 for 2017 budget, at 50, you still have about $6 haircut. If the price goes to 52, it goes to 56, you're getting close to $10 haircut. So that's a lot of money. If you put that on the volume of our output and how we spend the money. And
just to add again, even the Minister of Finance in recent time came out there, she had to even, go off course and joke a little bit and boast. Say, okay, we're even growing our SS code account. For you to grow your SS code account, that shows some level of confidence to the outside world that, hey, gentlemen,
the various economic council meetings, when they come out with a report, shows some accretion going into the excess crude account. And I think on that basis was where the NEC say, look, perhaps we need to push more money into the sovereign wealth fund because we're making some money. It looks like things are stable. But inflation is the spoiler of every...
the cancer.
It's the cancer of everything.
Inflation. It's not a good thing anybody wants.
Yes. So, this is a very sticky point. How do we address this?
Inflation. Inflation in Nigeria is fundamentally cost push. Cost push in the terms of coming from higher cost of production, poor power. We all know what it is right there in this side of town in terms of power, in terms of the country, in terms of power. And it's not demand pull. So fundamentally, it goes beyond the confines of the central bank in terms of managing monetary aggregates for monetary policy balances, in terms for them to be able to achieve lower inflation, so can have stable prices and be able to plan properly. Of course, but central bank is still facing another issue from an external price stability function in terms of the exchange rate of the naira, which we've exhausted in terms of us having more on our war chest to defend that. So inflation is going down. But on the face of it, looking at it from the strict definition, year on year, inflation is technically year on year. Month on month, it's been going up. But thank God, this latest data we have for April inflation shows that month on month has gone down, which suggests, of course, one point in the data in the trend line, which suggests that future inflationary parts may be trending down. So the base effect, which is basically not that we should be happy about, because inflation has been going up based on base effect, but month on month has been going up. But that is fine. So that even puts a dilemma in terms of the monetary policy option for the central bank next week. And our expectation is that given the importance of economic growth more than any other macroeconomic stability, they will take action and allow
on interest rate.
On interest rate, because like I said, the central bank has said it. Inflation in Nigeria is a cancer, like you mentioned, but it is beyond monetary policy control. It is more of a fiscal policy decision, and hopefully, like you mentioned, the budget, if the government continues to implement the budget properly, begin to engage and spend appropriately, spend wisely, build infrastructure, then we see general costs go down, then prices go down, and everybody's better off.
So if we do a T-buy or trial balance, like you do in bookkeeping, isn't it? The credit and the debit side.
Yes.
On the credit side of the government, you have the Niger Delta, you have oil prices, you have the geopolitical issues, you have a number of these issues working for you.
Yes.
On the debit side, which is the negative side, is inflation and interest rate.
Yes, inflation and interest rate. Like I said, everybody should be happy because, of course, inflation is trending down, but still high, negatively high. Inflation is a cancer because it just makes you poorer, no matter for a fixed income earner.
That eats into our credit balance, which is, no matter how good the FX market looks like, the consumer goods markets still feel the pinch of that.
Yes. And again, sir, if you look at it in the context of the monetary policy choice the central bank have had to make, they've consistently said that the intention of the central bank is to achieve a positive real yield of interest rate. The implication of that is that negative on that trial balance you're talking about, because they recognize that inflation is a cancer, and they recognize that inflation discourages investment, and then it discourages investment and puts a burden on the firm that wants the money, because the rate of return the person that wants to lend you money will be asking for will be higher.
And your cost of credit is also high.
So it's cost of credit ultimately, sir. Ultimately, sir. So that's the dilemma in context of what you're talking about in terms of the negative of inflation and interest rate.
So that would be a dilemma for Godwin Emefiele and the 10 members of his team next week. We don't envy him, but we're going to be here listening to him next week when they take those interest rate decisions. Babajide Solanke, Head of Research at FSDH Merchant Bank. Thank you very much for being here today.